This is Jeremy Swinger with the Rice Trader, just doing the August 27th TRT review. As always, it's a pleasure just to be able to review the world rice market every week and just to kind of give you thoughts about what the direction of the market is going. With that, let's get into it. It's been an interesting week, but it's been a slow week. Probably the key point that I see when I review the market is that for the first time really in the whole year, we're finally below last year's trade, which just shows the lackluster demand we're happening. Just marginally below last year, but we had been significantly ahead and running at a record pace much of the second quarter. So this is a big move and shows how much demand has really slowed down this year so far. I think that's the key thing. It is Eid for much of the Muslim world, and so it is a slower week for that as well. But aerially and macroly, it's just being a slow demand year. I guess we would also summarize it, it's a market of hopefulness, but a lot of fear. This slowness in demand with political interference and instability is really affecting the market mentality. And I see it very clearly in our local environment in a commodity that's not rice. In the walnut market, with India putting on a 100% tariff, prices have fallen dramatically below break even. Some are already quoting at 90 cents, 95 cents a pound. Extremely low prices not seen for a decade. But this is just an indication of how large supply, political interference is affecting a local market, and I see it carrying over. Now, that being said, prices have been relatively weak in Asia, but the question is, do they still have potential to fall? Well, this week, it's been a pretty lackluster move in prices. You know, I call the high quality basically in Asia at $395 to $390. You know, small things, Thai looked up a little bit, $5 a ton. Vietnam was up $3 a ton. But really, it's in such a short range that between negotiations, a buyer can probably get the same price for higher qualities from all the major origins. On the lower qualities, the brokens and low qualities, there's a huge difference. I mean, you get some very cheap Indian material with brokens at $280 and very low quality using at $345 for India versus Thai being at nearly $370. So there's a very big spread between the highs and lows, but really it's a tight market. On the same note, a lot of these buyers are very fearful. They're saying their demand is slowing. They're saying there's cheap wheat, cheap soybeans that are competing in some markets. And how are we going to continue this with large crops going to come off for the world rice market? So again, a lot of fear and a lot of concern in our rice market right now, and belief this might be a longer trend. What else are we seeing? There's a huge differential remaining to the U.S. Of course, with the Iraq trade going in the U.S.'s direction last week, prices have also dropped dramatically. We call U.S. at $535, but again, that's still $140, $50 a ton higher than Asia. So the spread between the U.S. and Asian markets is just so dramatic that there's huge opportunities in Latin America for Asian players. There is some tariffication issues. There is some obviously new market issues that have to be overcome. But there's huge opportunity at price spreads like this. If the buying community can just see the advantage. Of course, there's going to be issues that occur and some sensitivities one must watch. But these price differentials we haven't seen very often ever in the history of rice, and that means there's opportunity. What are some other key points? So we definitely see them keep moving in Vietnam, where they're moving to open up business for small business and relax the rules. That's an interesting thing to watch. Vietnam still remains up on the year by about 8%, so a great year for Vietnam. The Indian monsoon, we watch every year very closely. It is significantly behind. It's going to be a poor monsoon, which we've had very few poor monsoons in the last 30, 40 years. But it will be down about 7% today. But that being said, the increase in irrigation, just the moves in India have really shifted this versus 20 years ago. The general feel is the supplies are going to be good, and there definitely is going to be more non-basmati supplies planted this year. So there's not a lot of concerns in India about supplies, and obviously stocks have been very high. Probably the biggest concern in India is, of course, the political elections coming up, and that does need to be watched. But supply seems to be very significant going into the coming year. Obviously, we have to talk about China. China remains the big spoiler. All the major suppliers are saying how slow China demand remains, so you're going to definitely be significantly down. But more than that, it's the double punch. They're also exporting significant quantities into Africa and other locations. We continue to get heavy reports that in Japonica market, they're offering $350, $360 for old crop. If you can just look at the prices for lower quality Japonica, that's a good $150, $200 cheaper than when you're getting out of Vietnam, you're getting out of the southern US. It's just such a cheap price that if you can blend or if you can use it in your markets, it's a huge buy. And you're seeing it also in indica, where lower quality old crop can be used or blended. It's just at such nice prices that buyers are having to use it in this type of situation. So definitely China remains a spoiler to be watched. If I move back more to this side of the hemisphere, the US remains very chaotic, both politically and in supplies. As we showed last week, the crop's up about 25% in acreage. We are hearing very good yields in reports of the harvest. So the US is going to have a huge supply, very huge supply, we think. And so what's going to happen with this huge supply? Again, at this huge margin, you're going to come off a small crop where you didn't need all your customers, and now you're going to have to try to gander all of your customers back. This leads to price declines, but also you're probably going to have quality issues you didn't have on a smaller crop. So I see a lot of problems. You know, we did hit the mark that we expected of below $10 a hundredweight, which we called, and that was a 25 to 30% reduction we called out of the blue. A very good move for those who play the futures market. It's moved back up to 1070. We believe, again, this is overplayed, and especially deferred markets. The deferred markets are showing a premium to the harvest price, which is normal, but not in a market like this. Deferred contracts in the futures market should not be showing a carry in a market that's looking down. And I always say the markets like to move and wave. Even when a market's moving down, it waves down. It doesn't just straight down. That's not a real market. It goes down and it waves down. It has pauses and plateaus. So I'm still exceptionally negative on the US price. I'm relatively negative on Asia. I still believe when I talk to the customers, you could see the overall grain complex continue to pressure rice, lack of demand continue to pressure rice. And you get into the mid to lower 300s easily in the coming year, depending on how the crops come and politics lays out and such. So it's a very volatile time. You know, the trade war with China and the U.S. continues to go strong, and more tariffs put on, another 16 million, another 15 or 16 billion. It is a huge issue, especially with China. And the thing to remember is that the U.S. is at a massive deficit in the trade balance. And that's what it's correcting. It's saying, hey, in some markets we're giving up $400 billion in trade balance. We're trying to correct that. The problem is egg is not a significant part of that piece. In fact, obviously the U.S. is a big provider of egg goods, so it's what's being attacked. So the other countries are attacking this, but we're stopping aluminum, we're stopping cars in the U.S. So it's very volatile. I don't like tariffs. I don't like trade wars. It's often, there was a great article in The Economist that I read this week of two people shooting each other in the foot area and saying, hey, are you done yet? It's a great article, and that's my feeling really on this tariffication war. It's not good for the world. It's not good for these countries. But that being said, there needs to be a give and take, and there definitely has been things that shouldn't have occurred that has occurred. Non-tariff trade barriers that just been allowed to go on. Ridiculously pretending that you're opening trade but not. These are just things that cause massive issues as time goes on. So, being an economist, I don't like restrictions on trade, and they definitely affect price. And right now, egg just doesn't have the weight and the voice that's needed to fight against these bigger industries. And so we're almost in a back seat. A lot of crazy things could happen with these issues, as we're seeing. Needs to be watched extremely close as we move forward, especially with the exotic political environment in DC right now. This is just an extremely volatile time in the U.S., and you must watch the U.S. with great sensitivity. You could see some very aggressive moves that could affect things worldwide. On the other note, there's a lot of talk that NAFTA is going to occur. There's going to be a NAFTA deal. We've been hearing this for a long time, but the window between this having to occur and the next president of Mexico having to sign it because of the 90-day window is getting very tight. So when I just look at the other pieces I wanted to talk about, we are just in an interesting time. I remain negative with the high supply, and really now we finally have done what we worried that now we're off in the year with large supplies and growing stocks. So it's a very complicated year. We have to watch very closely as we move in to the fourth quarter, third and fourth quarter. And so it's just an interesting time. Additionally, in the rice trader this week, of course, we're doing an update on Indonesia, a very important market for the world rice market, and the basmati market. With what's going on in India and the trade and the coming crops, it's a great report to look at and just to watch the basmati market. And just a last point before I sign off for the week, and we spend the next several hours finish writing the rice trader. We have the World Conference coming up, October 10th to 12th. We just hope to see you all there. We always enjoy our yearly times with our friends and just a reunion of the world global rice industry. It looks to be a stellar event with record attendance. Please get your hotel rooms and sign up early with that note. I look forward to seeing you and talking to you next week. With that, I'm signing off, and have a nice weekend.